What if I told you that one of the biggest warning signs in crypto right now is not actually the price itself, but the fact that crypto is not rallying while the rest of the financial markets are absolutely flying? Because right now, that's exactly what we're seeing. The stock market is pushing higher. AI companies are exploding. The S&P 500 is hitting record highs. The Nasdaq is surging, and yet Bitcoin feels weak, Ethereum is weak, XRP is weak. Now, normally when markets go full risk on mode, crypto tends to benefit massively from that environment. But this time, something feels very different. And today I want to break down a very interesting article from Barron's that perfectly captures the current mood in crypto right now. The article was titled Bitcoin, Ethereum and XRP Fall and Why Even the Iran Peace Hopes Can't Break the Crypto Crisis. Now, first of all, that is an incredibly dramatic headline, but buried inside that article is actually some very important points that I think we need to discuss properly, because I believe this goes much deeper than just short-term price action. According to the article, Bitcoin was sitting around $81,000 while continuing to slide lower despite positive geopolitical developments involving possible peace discussions with Iran. And the article says this: one problem for crypto is that liquidity has dried up because other risk-on assets have offered sizable returns in recent weeks. And honestly, for me, that's probably one of the most accurate sentences in the entire piece. Because if you zoom out and look at what's happening globally right now, there is a huge amount of money flowing into AI-related stocks and traditional equities. Artificial intelligence has completely dominated the investment narrative. Everywhere you look, AI earnings, AI infrastructure, AI chips, AI software, AI companies smashing expectations. And meanwhile, crypto has gone strangely quiet. Now, the article says something else, and that I personally slightly disagree with, because it says this: it claims that Bitcoin and its peers rely on sentiment rather than fundamentals. And this is where I think mainstream financial media still fundamentally misunderstand crypto. Because yes, sentiment absolutely matters in crypto. I make lots and lots of content about this. Probably more than most markets do need sentiment. Crypto needs it. But to suggest there are no fundamentals behind crypto anymore is simply not true, especially in 2026. Because look at what's happening behind the scenes right now. You've got spot Bitcoin ETFs, institutional custody growth, stablecoin expansion, real world asset tokenization, and cross-border payment infrastructure like XRP. You've also got blockchain settlement systems everywhere, and also government regulation evolving globally. You've also got major financial institutions entering this space on a daily basis. That is not a market with no fundamentals. What this article should have said is this: retail speculation momentum is weak right now. And honestly, that would have been far more accurate, because I do think crypto is struggling with momentum right now. The excitement isn't fully there. The hype cycle has cooled off. Capital is rotating elsewhere temporarily. And that's actually very normal in the markets. For those of you who've been around a while will know we've seen this before, because markets move in cycles. Attention moves cycles. Liquidity moves cycles. Narratives move cycles. But right now, the dominant narrative globally is AI. That's where the excitement is. And because of that, crypto is currently fighting for attention. But here's something really important people need to understand. Quiet markets are often where the biggest opportunities are created, because historically, crypto has always had periods where people became frustrated, exhausted, bored, impatient, and then suddenly everything changes. In fact, I'd argue boredom is one of the biggest emotions in crypto right now. People expect non-stop rallies, immediate all-time highs, explosive momentum after the halving. Instead, they got chop, volatility, sideways action, pullbacks, frustration. And markets are incredibly good at emotionally exhausting people before making major moves. Now let's talk specifically about Bitcoin for a moment, because Bitcoin sitting around $81,000 would have sounded absolutely insane just a few years ago. People would have thought that that was unimaginable, but markets are psychological. Investors don't compare Bitcoin to where it used to be in the past. They compare it to where they hoped it would have already gone by now. And that is a huge difference. And in my eyes, it is a massive problem with the crypto community. A lot of people expected Bitcoin to already be pushing aggressively towards new all-time highs. Instead, the market feels heavy. Now, the article points out that Bitcoin remains significantly below previous highs, And I think that creates frustration because many investors expected a much stronger cycle at this stage. But what if this cycle is simply evolving differently? Because historically, crypto was heavily retail driven. Now, institutions are everywhere. ETFs exist. Major funds exist. The banks are now getting involved. Governments are now involved. And that changes the structure of the market completely. Institutional money behaves differently from retail money. It moves slower, it rotates differently, and it manages risk completely differently. And maybe, just maybe, people are still expecting the old crypto cycle in a market that has fundamentally evolved into something completely different. Now let's talk about XRP, because this is where things get especially interesting to me. XRP tends to get dragged down whenever the broader crypto market weakens, but I personally think XRP has one of the strongest utility narratives quietly developing in the background. And this is why I think there are some mainstream articles completely miss the bigger picture, because while price action might look disappointing short term, the infrastructure story around XRP and Ripple continues to grow. You've got conversations around cross-border payments, settlement infrastructure, liquidity systems, tokenization, stablecoins, institutional blockchain adoption, the list just goes on. And whether people like XRP or not, those conversations are happening. Now, does that automatically mean price goes to the moon tomorrow for XRP? Absolutely not. In fact, of course not. And if you think that, you've got some learning to do. But what it does mean is that real development continues underneath the surface. And honestly, one of the biggest mistakes investors make is confusing price not moving yet with nothing is happening. Those are two completely different things. Sometimes markets lag fundamentals massively, and crypto has always been famous for that. Now let's also discuss Ethereum, because Ethereum is arguably one of the strongest ecosystems in crypto, but I think Ethereum is also suffering slightly from narrative fatigue right now. Not because Ethereum is dead, far from it, but because markets constantly chase whatever feels newest and most exciting, and right now that is AI. AI has captured global imagination in a way crypto temporarily hasn't. But again, that doesn't necessarily mean crypto is finished. It may simply mean that liquidity attention has rotated somewhere else for now. And here's the part I think people really need to pay attention to. The fact that crypto is not rallying during a stock market boom could actually become extremely important for later. Because if crypto eventually begins moving aggressively while stocks remain strong, that's when liquidity rotation could become explosive. Imagine a scenario where AI stocks continue performing, equities remain strong, macro conditions improve, rates eventually ease, institutional confidence grows, regulatory clarity continues to improve, and suddenly crypto no longer needs to compete against collapsed markets. Instead, it can grow alongside them. And historically, when liquidity finally rotates back into crypto, it moves fast, very fast. And for those of you that haven't been into crypto for very long, this situation we're talking about now, when the money rotates into crypto after it's been feeling like it's been dead for a long time, it is lightning quick, and you will miss it if you're not prepared. That's why these quieter periods matter to me, because emotionally, they shake people out of the market. They convince people that nothing is happening. Crypto is dead, the cycle is over. And then suddenly, the market flips. Because crypto sentiment can change faster than almost any market on earth. Now, I also want to touch on something very important regarding media narratives, because financial media almost always explains markets after the move. When crypto pumps, they explain why blockchain is revolutionary. When crypto crashes, they explain why crypto has no value. That's how media cycles work. And it's important to not become emotionally controlled by these headlines, because the exact same publications calling crypto dead today could easily be calling Bitcoin the future of finance 6 months from now if the market reverses. That's why long-term investors need to focus on liquidity, adoption, infrastructure, macro conditions, regulation, and sentiment cycles. And also, keep an eye on the institutional involvement. Do not just focus on the daily headlines. Now, am I saying that crypto definitely explodes tomorrow? No, absolutely not. Nobody knows exactly what happens next. And anybody pretending that they know with certainty is lying. But what I am saying is that this market currently feels far more like liquidity drought than a collapse of the crypto thesis itself. And those are two very different things. One is temporary, the other is structural. And personally, I still see too many major developments happening globally for me to believe crypto is simply finished, especially when institutions continue entering, governments continue regulating, stablecoins continue growing, tokenization continues to expand, and blockchain infrastructure keeps developing globally. The long-term story still feels very alive to me. Now, whether that translates into immediate price action, that's another question entirely. But I do think the next few months could become incredibly important for crypto. Either weakness continues, liquidity keeps rotating elsewhere, and crypto drifts sideways for longer, or the market suddenly finds a catalyst and sentiment flips aggressively. And if there's one thing that crypto has taught me over the years, it's that this market can turn incredibly quickly. So let me know what you think down below. Do you think crypto is genuinely in trouble right now? Or do you think it's simply another quiet accumulation phase before the next major move? And do you agree with the Barron's article saying crypto mainly relies on sentiment? Or do you think the fundamentals are far stronger than mainstream media understands? Drop your thoughts in the comments below. And finally, guys, don't forget the new episodes of the UK Crypto Podcast go live every single Friday at 7 p.m. UK time. Last week's episode did incredibly well, where we broke down Jake Claver's domino theory for XRP and discussed the possibility of XRP potentially leapfrogging Bitcoin during a future liquidity crisis. The response to that episode was absolutely amazing, and it's been great seeing so many of you enjoying those deeper macro discussions we've been bringing to the podcast recently. And honestly, we're even more excited for the next episode because this Friday we'll be interviewing the CEO of the world's largest crypto publication, which should lead to a fascinating discussion around crypto adoption, institutional investment, regulations, media narratives, and where this market could be heading next. So make sure you check it out when it drops Friday, 7 p.m. UK time. I will link the podcast playlist at the end of this video so you can see the most recent episode available, depending on when you're watching this video. And as always, guys, thank you for watching. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.